Today we're going to go over 4 earnings reports for Oracle, C3.ai, MongoDB, and Casey's General Store. Ladies and gentlemen, welcome to Wealth Down. My name is Noble BM, and in today's video we're going to go over the earnings reports of 4 companies, and we're also going to do a bit of risk analysis in order for us to determine should we buy, sell, or hold these companies if we want to own them, or maybe we're just considering to sell them. Let's move on to the next one, which is C3.ai, and let's take a look at their earnings report. So C3.ai reported earnings also after by yesterday. Its official Q3 earnings report was released, and as at the quarter ended on November 30th. However, based on their Q2 result, we can analyze their potential performance for the future outlook. Now, everything that I say here, take this with a grain of salt, because I don't see them really, although they're up for the entire year, 46%, this is year to date, 43%, they went down, but they came back. So this is what happened at the earnings report. They went from $41.77 to $37.60 right after the earnings report, and they bounced back completely. Now let's go over the earnings. So they reported a revenue of $94.3 billion, up 29% year over year. The subscription revenue was $81.2 million, constituting a 86% of total revenue, which is pretty interesting and indicating a growth focus on the recurring income. Now, net losses were 52 cents per share, typical for a young growth company, I must say, and a strong partnership established itself as the preferred AI application provider on Microsoft Azure. Potential increases adaptation. This is very good. Now, a couple of industry trends that were interesting. So enterprise AI market growth. The enterprise AI market is expected to experience significant growth in the upcoming years, creating a large opportunity for C3.ai. Also talk about their increased cloud adaptation as companies move to cloud. The demand for cloud-based AI solutions like C3.ai offerings are likely to rise. Also, let's take a look at the competition. The enterprise AI space is becoming increasingly competitive. This is what I'm talking about when we analyze NVIDIA. I do see competition sneaking up on NVIDIA. Now, with established tech giants and startups coming after them, you should take a good look at C3.ai if you want to buy this company. So the potential outlook for this company is, well, the continued revenue growth is expected driven by subscription model and potential new customer acquisitions. The focus on profitability in the long term, investors may be looking for signs of investment in profitability metrics. Also, let's talk about the impact of Microsoft partnership with C3.ai, because the success of Microsoft's Azure will be crucial for C3.ai's future growth. But they are looking for over a competitive landscape, because C3.ai needs to demonstrate its competitive advantage against established players. So let's take a look at what should investors take into consideration when buying C3.ai. First of all, it is a pretty young company with a promising future in the growing enterprise of the AI market. However, several factors need to be taken into consideration here. They have a limited track record, a high valuation, and competition is around the corner. As a relatively new company, C3.ai has a limited track record for profitability, and the stock price may be reflecting future growth expectations, which may not be fully realized. If we take a look at the stock here, we can clearly see, although it had a pullback, this is from pretty high standards. They are massively above their 50-day moving average, 100-day moving average, so they're pretty deviated from their highest moving average. Although C3.ai offers a compelling solution in rapid growth markets, however, it is important to be aware of the risk involved before investing. So let's go over a small risk calculation here for C3.ai. Let's take into consideration the RSI, which is at 78, is massively over the 70 limit. So we're going to take this into consideration as very high risk. Also, the MACD is currently at astronomical level, so strong buy. I would also take this into consideration as very high risk. They don't even have a PE, so even if I want to calculate this, not even going to include this here. I couldn't because they're actually not generating any kind of profit. They did pull back and they do have a good outlook here. Also, if you take a look at what analysts say from this point, that their forecast for the next year is pretty negative. So I'm going to stop here with the evaluation of C3.ai because we can definitely see, in my opinion, I wouldn't buy the stock. But you know what? I could be definitely wrong. So let me hear from you folks. What do you think about C3.ai? Is this a buy, a sell, or a hold for the current price of C3.ai? Definitely write it down in the comment section below. So that's it for today's episode. Hope you enjoyed it. If you did, like and subscribe. Definitely come by the website. We did move the website. Now it's at Manhart Media, no longer at WealthDom. So the link is down in the description below. Definitely check it out. You're going to see all of the posts. Every data that I just talked about is in the blog post for each and every company. With this being said, thank you so much for watching. I'm Noble BM. Stay safe out there. Catch you next time. Bye-bye. Bye-bye.